We have some breaking news from Citi. Bitcoin will go up if more people buy Bitcoin, and it won't if they don't. I don't know how they figured that one out, but let's read up on this. Citigroup analysts Alex Saunders and Nathaniel Rupert have a new report out on how to value digital tokens. The price of Bitcoin is dependent on how many people want to own Bitcoin. Really? Previously, Citi had this Bitcoin valuation on a four-model approach. The mining electricity cost sets the price's floor, stock to flow, the ratio of new production relative to circulating supply, which reassures believers by presenting an inexorable, did I just learn a new word? Rise in the price of Bitcoin regardless of user adoption and acceptance. Adoption rates, which in this context resemble an installed user base, offer a way to measure network value. Macro factors, by which Citi means Bitcoin's historic correlation with equities and its inverse correlation with the dollar. Strong equities and a falling dollar makes Bitcoin go up. The main change in their update is an assumption that crypto is getting too big for anyone to ignore. The fact that major banks are looking at Bitcoin, the fact that small nations are going all in on Bitcoin treasuries, we keep seeing more and more public companies by the month, by the day, getting into these Bitcoin strategy, Bitcoin reserves. And I quote, continued regulatory clarity will lead to more traditional financial institutions increasing involvement in the crypto ecosystem in our view. This will increase correlations and spillovers into the financial and real economy, increasing crypto's importance in its own right. And because of this, they are revisiting the four-model approach that we mentioned earlier. Two of those four models can be discarded immediately. Since production cost moves up and down to keep block production constant, it's useless for putting into a projection. Also, stock to flow for Bitcoin looks nice because it gives incremental gains all the way to infinity, but only an idiot would ever consider that a useful forecast. Shots fired. Macro factor valuation just means whether equities and gold are going up or down. Citi offers its house views there, but frankly, toss a coin, they believe. Heads or tails. All that's left then is valuing Bitcoin as a product of Bitcoin ownership. However, even that's not that accurate. They mention these hard to predict events such as the FTX collapse, the YOLO rally of 2020 and all the stimulus checks there, and so on and so forth. You know, one thing they don't mention is the cycle, the 4-year cycle. Why don't they mention that? Maybe there's just people that aren't aware of the cycle yet. Now, the way they see it is it's all about macro factors. Macro is going to be either good, neutral, or bad for Bitcoin. Network value, or the adoption rate, is on trend to be worth 75,000 per Bitcoin, all else being equal, which they rarely are. The current price and any future up moves rely completely on more people wanting to involve themselves with Bitcoin. The political winds says they will. Why not join them? Now here's their base case, bear case, and bull case. Bull case 199,000, bear case 63,000, base case 135,000. Even as a base case, they see Bitcoin going up. Their bull case sees huge demand from ETFs and positive macro factors and slightly more adoption than their base or bear case. I think in the end, basically no one knows. You can grab a dart and throw it at a dartboard, and that random price that you hit could be as accurate as your prediction. Let's face it, my 150K prediction isn't set in stone. It might get there, it might not. I think Bitcoin still has a fantastic chance following the cycle. I think it's more likely than it isn't that Bitcoin's going to reach 150K. But even then, no one really knows. I don't know, you don't know. We could have some major negative event that just drops Bitcoin's price. We could have more news of these whales from back in the early days of Bitcoin taking profits, selling billions of dollars worth of coins. The fact is, we simply don't know. But there are things that can help us, such as following the 4-year cycle, following what the Fed is doing. This is a reminder that Bitcoin should be treated as a long-term investment. If you want to trim where you think the peak of the cycle is and want to buy in heavier where you think the bottom is, that's perfectly fine, that's great. But Bitcoin long-term always wins. You good, bro? Yeah, I'm good, bro. Looking at Bitcoin on the chart, we had a pretty quick drop here. We are now under our support. Let's see if we can reclaim it. We might be finding these as a resistance and heading down to this 112,000 area, which also happens to be where the 200 MA is. There are times on Bitcoin's rallies where we come down and retest moving averages. That is normal. That is natural. That is even a good thing. We did have our golden cross. Our last one was back here in May. Typically after a golden cross for Bitcoin, we do see a large up move. We have moved up a bit from our point of golden cross, but not all that much compared to other times we have posted a golden cross. But this is a consistent indicator that usually follows a good upwards move. I do think we are still going up. If any of these past golden crosses throughout this cycle are an indicator, we should continue higher. A little cooldown after being this overbought is natural. Not to mention we did have a bearish RSI divergence. We saw equal highs on the RSI here. This is the 4-hour, equal highs there. However, we saw higher highs here, and we have fallen from that point. Bitcoin after this drop is now about a 30% move from 150K. We're getting more and more of these bullish price targets, these $200,000 price targets, $250,000 price targets. For Bitcoin to achieve that, it basically needs to gain at least 20% or more every single month until the cycle ends. Now, is that likely? You tell me. Like I mentioned earlier, we do have some whales selling, some OG hodlers that have been in the game for literally over a decade. One mysterious whale makes a 17 million% profit on a 14-year-old Bitcoin bet. Now, I'll leave this down below for you. I think the most interesting part of all of this is the comments. Another indication that we are so early. There is not a single bullish comment of these 36 comments. There is not a single bullish comment that I have found. This will convince people to get into crypto, even though it is far too late to get profits anywhere close, which is exactly how Ponzi schemes and bubbles work. The tulips, man, the tulips. And look at this. You can't fix stupid. Back in 2010, my coworker asked me if I thought investing in Bitcoin was a good idea. I told her I thought it was a scam. I feel bad for their coworker. I still think it's a scam, but if I did it and held on to it, you can still reverse your mistake. You can still fix your problem. You can buy some Bitcoin. While you think it's at the top, and while we're probably never going to see a 1,000,000% gain or more, the reality is, looking at it as a scam, sure, a decade ago or more, you could look at Bitcoin and be like, you know, this is very, very speculative, and it was. At this point, though, is Bitcoin really speculative when BlackRock is into it? When some of the top investment firms, top banks are buying Bitcoin by the boatload? When the US government is putting in positive regulatory bills? I swear these people are looking back with regret that they didn't buy Bitcoin, but they're not smart enough to actually buy it now. They still see it as a scam. They see it as tulip mania. It's ran up too much. And while I would tend to agree that now might not be the best time to buy Bitcoin at this point in the cycle, I do still think Bitcoin is always a solid DCA if you don't hold any. If you have a long-term mindset, if you're looking at Bitcoin over 5 years or more, it is definitely always a buy in my opinion. Wonder when this Ponzi scheme comes crashing down. You know, this reminds me of a fantastic quote from Michael Saylor. If you do 100 hours of research and you come to a certain conclusion versus someone that did an hour of research coming to a different conclusion, which person's conclusion would you believe? The person that spent so much time on the crypto space or someone that just glanced it and wrote it off as a scam? Michael Saylor said something to that effect and it really stuck with me. The more time and effort you put into researching something, not only the more likely you will be right, but the less naive you will be as well. I can almost guarantee you that not a single one of these people actually really looked into Bitcoin. Some of them probably don't even follow a cycle, believe that there's any sort of cycle to Bitcoin, even though it's staring us right in the face. It's blatantly obvious that Bitcoin has been in a cycle and probably will continue to be in a cycle for many years. But also the adoption, the fact that so many public companies are continuing to get into Bitcoin, so many banks, so many investment firms, so many smart people with money, with knowledge that are so bullish on Bitcoin. I don't know how you could be bearish on it. Now, moving on before I blow a gasket. Mike Novogratz, we're right in the same boat. Bitcoin could hit 150K this year, but Ethereum might outperform Bitcoin. And Galaxy CEO Mike Novogratz believes that Ethereum could do better than Bitcoin over the next 3 to 6 months. That would finish up the cycle and that would go right in line with alt season. I tend to agree. Institutions buying Ethereum will help propel its rise. We have been seeing that with these massive inflows from the spot Ethereum ETFs. This is definitely not just average retail investors. This is also a lot of big people with the big money. ETH also still remains under its all-time high from 2021, while Bitcoin has continually broke out from its all-time high of 69K. And publicly traded companies even are copying the Bitcoin treasury model from Strategy or MicroStrategy, but instead of Bitcoin, they're doing it with Ethereum. SharpLink Gaming, for example, bought $1.3 billion in Ethereum. Bitmine Immersion aggressively buying $2 billion worth of Ethereum. And recently, we saw Ethereum's best trading day in history, a $726 million net inflow in one day last week. And in the course of last week, they added more than $2.1 billion. The market is betting on alt season, if that is not apparent. That's basically the end of this article. He tops this off by saying Bitcoin could reach 150K this year. Let's just see it play out now. Now, before I end this, I do want to talk about btbt. We are continuing to try to get this gap fill, but it's just not quite there yet. We are 10 cents away. Maybe we can get it by the end of the day. Maybe next week we can get a little more red, have that gap fill for btbt. A fantastic time to add, in my opinion. Maybe a test of this previous trend line. This might be something the market will watch for. The 50 MA, we got very close to hitting it here. But yeah, keep an eye on btbt. I do think this gap fill would be a fantastic place to start adding again. We did have a bearish divergence here. We saw higher highs on the chart, but we saw lower highs on the RSI. We have cooled down from that point. Earnings for btbt is in mid-August. We do have some Bitcoin miners reporting earlier than that, so you definitely want to keep an eye on Bitcoin miners like Mara, for example, that's reporting at the end of this month. That will give us some insight into what to expect. But how are you guys feeling today about Bitcoin? How are you feeling about alts like Ethereum and others? I do think alt season has been slowly kicking off. We've been seeing Bitcoin dominance drop. We've been seeing massive inflows, better inflows to Ethereum than to Bitcoin, which tells a lot. I do think the market is speculating that alt season is coming in full effect, and we should be seeing that over the next 3 to 4 months or so as we finish off this cycle. But thanks as always for watching, guys. I appreciate you, and have a good weekend.